If you own a small business in Indiana, this year is probably going to be one of the most confusing years we've seen in health insurance. Rates are increasing. You're probably seeing that in your renewals if you have a plan currently. Marketplace plans are getting definitely more expensive in the tune of 20 to 30% for every family. Employees are now demanding more benefits than ever. And many small business owners simply they can't afford group coverage anymore. But here's the reality. There's actually more options today than most Indiana employers realize. In this video, I'm going to break down what changed in 2026, why the costs are increasing, the different options that small businesses have, and what Indiana employers should actually be looking at right now, especially if you have between 2 and 50 employees. So let me get into it. This video is very much for the Indiana small business owner. If you have 2 to 50 employees, recruiting has become harder. Employees are asking about benefits because what you did previous years doesn't work no more. Your staff is buying expensive marketplace coverages, or they're going and their families are going without coverage at all, and they're asking you about it. So I know many of you are thinking, hey, offering benefits is out of reach financially, but you need to know all your options, right? So this is very much true in what I've seen in the market this year for mechanic shops and contractors, some of these smaller construction companies, blue collar employers, and white collar offices without dedicated HR departments. You don't have anybody full time who's doing the research. So I'm just going to give it to you here. A lot of employers are feeling the pressure right now, so you're not alone. And honestly, many of them are operating off outdated information about what benefits actually cost and what options exist today. So, what's changed? Well, first of all, medical costs continue to rise, right? No matter whoever has health insurance and whatever group they're in, right? Their costs went up this year. Labor costs in healthcare are up, and insurance carriers are adjusting pricing because of that. On top of that, many marketplace plans in Indiana saw major increases at the beginning of the year. Now, a lot of people thought, oh, it's not going to happen, but it did. And employers are feeling it. A lot of families who think marketplace coverage was affordable are now realizing premiums are not affordable, deductibles are painfully large, and networks are becoming too limited. If you have an employee who always took their kids to a certain hospital group or a certain doctor, and now the network's like, oh, they're out of network. Well, that's not making the spouse who watches the kids very happy. Many people are now stuck paying thousands of dollars out of pocket before their insurance even begins to help them. And because of that, employees are starting to push employers harder for benefits again. Then it becomes a major recruiting and retention issue, especially in the small business industries. So if an employers can leave your company and go somewhere else that offers benefits, many times they're going to, even if the pay is similar. So the biggest mistakes that small businesses are make is now they believe, hey, I can't pay 100% of health insurance, so I shouldn't offer benefits at all. Well, that's simply not true. You don't need to pay 100% to offer great benefits. There are many ways to structure benefits today. One, you're required by law to only pay 50% of the health insurance cost for the employee, not the employee and their spouse, not the employee and their family, just the employee. A lot of people have that wrong. So if an employee alone would be, $500 or $600 a month, you're responsible for $300 a month of that. You're not responsible if they add their whole family to the plan, right? You can also just start with voluntary benefits. Let's say right now you're currently a small business owner, you're hearing the pressure of this and you don't offer anything. You can just start with voluntary. That doesn't cost you anything unless you want to participate at it, right? Another thing that I've been putting a lot of different clients on this year is level funded plans. They're just more affordable. And it's an 80/20 plan with a deductible, but it has a reinsurance clause. So you're not fully responsible for everything. And it works great for these small businesses, especially if you have a younger and a healthier group, right? You can even look at ICRA strategies. And an ICRA is simply this it's a platform on top of the marketplace. So the only issue I have with it is everybody plan most likely still have a group structure and you're still offering benefits to your employee. So something offering something is always going to be better than offering nothing because employees just want access to health coverage, right? They want their family protected. They would love group rates and group pricing, and they like stability. They'd like to quit having to think about these issues. And if you help them quit thinking about these issues, they can focus more on work when they're at work, right? So let's talk about the major options Indiana employers should be looking at in 2026. First is traditional group health. This is the most common structure. Employer contributes to the premium and employees roll in the group plan. This is the structure most people are familiar with. It usually has very strong provider networks. It works well for companies that are focusing on recruiting and long-term retention. For many stable businesses, traditional group health does make sense. If you have low turnover, a stable workforce, long-term employees, and employees who you know would value getting these benefits, right? The carriers were used for that. Nationwide, Anthem, United Healthcare. These are the major players in Indiana, but pricing and underwriting does matter more than ever, so the health will matter. The next option, which I previously mentioned, is level funded. These become popular with healthier groups. The idea is you still get a fixed monthly payment, but if the claims work well, like if you don't have a lot of claims, you might actually get some money back. But there's reinsurance stacked in there to protect against any kind of catastrophic claim. Now, this option isn't right for every business, but if you have a healthier, sometimes younger group, it can make a significant savings opportunity to those fully insured plans. So, this is where someone has to actually work with a broker, a local broker, and understand what they're getting. Here's what affects the price. What's the average age of your group? What's the overall health of your group? What industry you are in? And your group health size. Even though you're under 50, if we're talking about 3 people versus 35 people, there's going to be a massive difference. ICRA is another thing I mentioned. It stands for Individual Coverage Health Reimbursement Agreement because employer reimburses employees for individual health insurance coverage. Employees get to choose their own plans, right? The employer controls the reinsurance structure, and this can create more flexibility. This works well for teams that are distributed possibly in other states, very small companies, or employers that are priced out of traditional plans, the level or the fully funded, right? Now, the ICRA plan isn't perfect, but I've used it just a few times for certain groups who really wanted some that maybe had an older age group, right? A business owner had a budget that they had to fit in, right? And a couple other reasons, but there is that. Now, let's say you have nothing, right? You have no benefits. You know you couldn't afford even $300 a month per employee per month. It's just not in your business. Maybe your business is newer, or maybe you've had some rough years and you currently have no benefits. Something you can do is just voluntary benefits, right? So, what that is voluntary benefits allow employees to purchase coverages through payroll deductions. So, you'll do payroll deductions. In many cases, the employer doesn't have to help at all. They get to buy life insurance, accident insurance, cancer plans, and disability, dental and vision, right? Now, why would an employee want to buy just that and not the health insurance? Maybe they already have health insurance to their spouse. Maybe they did get on a marketplace plan and they're still affordable. But these plans pay cash directly to the employee and help the employee maybe pay for the deductibles or make up for a week of work if lost because of an accident or things like that. Sometimes voluntary benefits become the bridge that helps employees start building a real benefit package. And employees can often appreciate access far more than the employers ever expect, right? And there's about 80 different carriers in that space. So, what do employees actually want, right? And because many employers are overcomplicating this, most employees just want something affordable, family protection, prescription access, stability, and a peace of mind. Benefits are no longer just an HR perk. In many industries, benefits are becoming a recruiting necessity, especially for skilled workers. Even mechanic shops and contractors are seeing this. These are high skilled trades. Blue collar employers are absolutely seeing this every day, and it's getting asked to them. Good employees now have options, and benefits are becoming part of the deciding factor. So, if you're a small business owner in Indiana, how should you approach this in 2026? Right? It's very simple. One, you get a census done, right? I need real numbers before helping you make a decision. A census is named everybody's name, gender, and birth date, and income level. Pretty simple. And you add their family on it, right? Second, I go out and I shop for different options, right? I'll come back and bring you not just one carrier, not just one structure, but usually 4 or 5 to go through, right? I'll usually get 10 or 15 back and I'll throw out ones that just don't make sense. I don't like doing anything when it comes to group health rather than an 80-20 plan. I don't like doing a 70-30 plan, right? Now, you don't want to just shop on price. You need to also shop on what the value is. The cheapest plan isn't always the cheapest plan, right? Once it starts affecting employees negatively, right? You want to make sure you're looking at that great. What is your provider network? I always use strong ones. And then we sit down and decide what is our long term plan here. We don't want to just do this to create a new expense for you. We want to use this as a retention and a recruiting tool, right? So that means whoever's doing the hiring needs to let these interviewees or whoever you're in your office know, hey, we're doing this to keep you here, right? Then you need to understand how your contribution is going to work, right? Like I said, you're required to do 50%. Many of my business owners, after we find the right plan, do 75 or 80%, which is extremely strong, right? And helps your retention just jump 400 or 500% and helps your recruiting work a lot better. So if you're an Indiana business owner, you want help upstanding your options for this year, reach out. BlackIron Financial. We help small businesses, blue collar employees, white collar employers, right? Independent agencies and PNC agencies. We understand everything about group health, voluntary benefits, and even other strategies that we can talk about. We can help with renewal reviews, free census evaluations, benefit comparisons, and strategies. So if you found this video helpful, make sure you click a like. It really helps me get this out to any other Indiana Hoosier business owners. And yeah, I appreciate it.